I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Green arrows around the world as we enter the third quarter. We have a big week of economic news with a big jobs report on Friday. Are the summer lows in for the U.S. markets? I'm Brittany Umar, and the morning call starts right now.
Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So futures are positive this morning as we begin a new quarter. And stocks bounced back last week to end the quarter on a positive note. So now the question is, of course, where we go from here.
Right. It feels like last week was a little bit easier to gauge because we were so oversold and we were looking for that pivot low. We saw it at 1560 early in the week. So then we figured, you know what, it's been a strong year, a strong second quarter. Why wouldn't they try and mark it up for second quarter performance? So from that low, we bounced back to resistance. We bounced back to the 50-day moving average. And now we're at a point where, you know what, the market's going to have to prove that it was just more than a bounce back to dress those windows.
Right. So why don't you show us a visual then of the levels that you'll be watching?
Okay. Well, on Friday, we put in a little bit of a low. So if you look here at the chart, you will see at least that's a point of reference to trade against. You know, real quickly, you talk about the May 22nd outside day. You talk about the breakout trendline failure here when the FOMC came out with their statements and they talked more tapering, and then boom, that was the breaking of this trend line. So last week we did find support at the 1560 area, okay, above 1540. Reclaimed the 100-day. That gave us some clues to get long, and then into resistance, worth selling a little bit. Market has a lot to prove itself right here. So you take a closer look and you want to be a little incremental, which is the way I'm going to do it. Here's your high level support. Okay, so if you want it to be long versus this 1601. The longer it trades above 1601, the higher the probability that it takes out that, you know, Friday high or Thursday high of 1620, and then will it be able to hold and close above this trend line? If it does, you have a gap that gets filled all the way here up to 1628, and then, you know, if that's the case, you know, people will start saying, you know what, that was a summer low, let's put a portfolio approach back on, etc. If we fail at this mark and do maybe another, you know, breakout failure and continue down, then we'll see what happens here. The level below this 1601 comes in right here, okay, which is around 1592. And then by that time, the 100-day might be retested the same way we came down to the 50-day and retested it twice. You know, we'll see if this serves as some type of support. But overall, we're right in this area. So I think if you're short, you're coming in today and you're like, oh, okay, I have to have a plan here because if we close above 1620, I could get squeezed. And if you come in long, you could trim some. If you come in somewhat flat like me, you have to say, okay, am I going to start putting on positions, or am I going to just continue to be a little tactical until, you know, we got towards the end of the week or even earnings season.
Right, and we're going to try to find some of those positions that are out there right now, potential setups, I mean. But we should also check in on Japan, which continued to bounce back. The Nikkei bounced back 1.2%, is now back above the 50-day. So this is just once again, I think, adding fuel to the thesis that it was viable at 20% off its highs.
Yes, and I remember we were talking about this mid-June after, you know, the CNBC segment where it was down 20%. Everyone started saying, run for the hills, you know, Abenomics is out of the question. But we're like, okay, you know what? Put it in perspective. A 50% plus move from November, so a 20% move off the highs, not the end of the world. And if you look at it technically, it really made sense because this was your outside day. So if you were following this market, one of the themes that I say is if it's holding above the 8 and 21 day, no matter what it is, you try and stay with it. Then this outside day could have got you out of the way. Then what did it do? It came back and tested the 200 day. I think right around here is when we started getting interested. It was a good trade, and then, you know, for those that could do it, a nice accumulate. And then lo and behold, we're above this new trend line. We're above the 50-day. You'll probably get some resistance around here. It's not going to just, I think, run away. But overall, it just shows you that, you know, outside day says to sell. this hammer bottom above the 200-day says to buy. Then you have a higher low. So you can technically approach countries, not just stocks.
And we've talked a lot about Scott's thesis about going long the TBT and short the TLT. And as rates have backed off a bit, we are seeing a pullback in the TBT. So would you say this pullback is buyable and your thesis remains intact?
Yes, and it had quite a move, right? From months ago on that gap and go, and then it closed above 69.5 and went as high as like 75. And we said trim and trail for this reason, that you can get some kind of pullback, and you could buy it versus be upset or scared, as it takes place. So you look here at the chart, and you will see that it topped out right here. You had this upper. First of all, this was the support. This was that gap that I just talked to you about, and then boom, move all the way back through resistance. So sometimes you want to retest that resistance. So this was your upper flag that broke to the downside. It lost the 8-day, but you know what? It's been above the 21-day moving average during this entire move. So that is a spot to potentially look to buy some, which I will be looking to buy some because I'm not involved, in intermediate terms. So look right here, 71.01-ish, I think, maybe even a little bit higher, 71.55, it might try and protect the gap. So in this area, if you sold strength or had a high level stop, this is your area to look to buy back and maybe even short the TLT, which is the same type of trade around 113, 114.
Well, let's check the temperature of the various sectors as we head into the month of July. And let's start with the financials, which at this point have reclaimed just about all key moving averages. So what do you think of the composure of the group?
I think it's still trying to provide leadership. The regionals stepped up during the decline. Some things acted better than others. You look here at the XLF, you will see that it was like the last to break down, and then it had a nice bounce back. This never really went below the trend line like the S&P did, so it held there, and then now it's in this intermediate area below resistance. I don't know if it's going to have enough power just to break right through, but it's worthy of watching, okay, because it does provide leadership. So I would say at this point, the longer it stays above 1920 and goes sideways, the higher the probability we get a trade above this trend line, that is resistance for now. And if it stays resistance, we'll know it needs more time and we'll figure it out. But if we could break and close above it, that could be a nice trade. And then obviously you look to some of the financials that you like in that group, whether it's JP Morgan, Wells Fargo, Goldman Sachs, Bank of America, there's lots to choose from. Right.
And similarly, the retail group has been able to get back above all key moving averages as well. What do you think about retail? Will we see it get back to highs soon?
You know what? It's in the game for that. It hasn't been as strong recently as the financials. And if you look here at the chart, you will see that it did bounce back. This is a trend line that I've been following. It broke it and then bounced back to it. So that easier trade. Look at this red dog reversal. Wow, that was powerful. And it also held above the 100-day. So you're seeing relative strength here. So at this point, you want to say maybe it needs time to base. And I would say the longer it stays above, just say 52. The higher the probability it can go. Last week I talked about Walmart, right around here when it showed the relative strength. I'm like, probably a good time to buy it. And then you saw a small outside move. This is what you don't want to see at trend lines. You don't want to sort of see, a break above with no commitment to it because that shows some distribution. But either way, nice little trade here. I think if Walmart holds 74, you'll see some of the big box guys, stay in the game too. But overall, tactically is still the way to go, I think, here.
Right. And the home builders, we know they got hit hard during the pullback, but we did get a small bounce there last week. So what do you think of the XHB?
Everything's kind of the same where you had the break. You had a high level stop, you had the break, you had the downside follow through, and then you had the bounce back to resistance. So we need to see if some of these key groups could actually take back resistance and hold above it. You look at the home builders here, and you'll see, remember this trend line we talked about going all the way back here? You look at it, it seems so easy when you look back at it. This was the break below, tested the 200, and now it retested it up to the upside. So the question is, can it get back above it? Or was this, dressing, or was it a bounce back to be sold? So with that said, write down this high here around 29.85. And if it starts to get above and stay above it, we'll see some healthier action. But if it can't hold today's gap up and starts to break below this, chances are, 29 would be a spot for a higher low. But if that doesn't hold, then that the summer low is in here, and still it's more trading versus sitting.
How about consumer staples, the XLP? Now, it's been putting in a series of lower lows and lower highs. So even though it did poke above the 100-day, does that give you any thought to think that could change anytime soon, its behavior?
This one, it was a stronger group in the beginning of the year, and since then, like you said, it's been lower highs, lower trends. It's still intact until that changes. And if you look here, you will see, look at this trend line that broke, that was here, starting in the beginning of the year. That was your little advertisement to get out of the way. Then you had a bounce back ascending channel, broke below, another bounce back, almost filled the gap. This was pretty weak on Friday. So this is still, in my opinion, a weaker group, not exactly where, fast money's going.
All right, we're going to go in the trenches with high beta tech, which has been a mixed bag. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with high beta tech, which has been a bit of a mixed bag, but let's start with one of the leaders, Amazon, almost already back near highs. Would you say this is one to buy on a pullback?
It's just hanging around those highs, and we've had some trades in the last month, but overall, we've corrected off the highs. A lot of technology's gotten beat up, and you look at the chart here of Amazon, and it's still hanging right there, right near not only 2013 highs, but historic highs. So there's quite a lot of money involved here. They haven't had a blockbuster report in a while. They've usually had bad reports, and it gets discounted, and everyone's shaking their head, how did that happen? But anyway, here we are, right near this 280 to 284. In my opinion, I guess this money's here for some reason, and I'm not sure if it needs the earnings to be a catalyst, but if you are short this and it starts to break above this prior, I would cover, and if you're looking for a nice trade, if you see some heavy volume, we see it close above 280, chances are maybe they do it before, which would be easier considering that traders like myself don't like to take stocks into earnings.
Right.
We like to trade them after or do some kind of option strategy.
Now, how about LinkedIn? This one's been looking pretty good as well, putting in a series of higher lows and is back above all key moving averages.
Yeah, and this one is knocking on the door of this downtrend that's been controlling it ever since the last quarter. Last quarter, stock ran before earnings, which was great because it gave traders an opportunity to trade it through levels without having to hold through earnings because, again, that type of action is more for longer-term investors or people who have a different approach. You look here at LinkedIn, you will see this was, I remember talking about whether we'd get a move to 200 plus after earnings. Well, it happened before, and then this was after the report. Since then, micro tactics along the way. Some made money right here when it broke this area short. Then it's been slowly, building a new little uptrend back towards resistance. So now I would say if this gets above 180 to 184 prior, maybe you get a little bit of an earnings move, or to fill the gap before, and you make some money. But all in all, you've still seen a lot of commitment to the stock. If you look back and you go to your monthly chart, we really started talking about this way back when down here. Okay, so with that being said, if you take a longer-term approach, this was your breakout above 120. Even though you do have this gross, outside candle for the monthly, it didn't really lead to much. It's just leading to a nice digestion up here, showing you that this company has support and has a big future. So, we shall see if it, this quarter will be enough to get it back above highs here. So all in all, let's see. Short term, trade above 182-ish, and I think some guys will gravitate there even beforehand.
Well, as of late, anytime we talk about standouts in tech, we talk Amazon and Google every time. But Google seems to be losing a little bit of steam. Do you think this is just a breather before higher prices are in store?
This one, I think, got another $1,000 price target today, and it's just been a little bit more lethargic because it's such a high-price stock. It's so capital-intensive. So up here, traders don't feel as comfortable sinking their teeth into things like maybe an Amazon that is lower priced. I know people say, prices don't matter, but it does when you have a trading account and when you see how wide and loose these things are. Overall, though, it's above the 50-day. If you look at the chart here, this was, support that it came down to, which was a nice trade before topping out here with the market. Here's your 50-day, still held above it, even though it didn't look like it was going to. And now, you have another little short-term area right here. Okay, if it gets above this and the market's strong and stays above it, this recent high here is what, 885? It can continue. And then you have, you can almost draw your line across here back to 900 and change. But overall, above all the moving averages in the game, still a lot of institutional money here. It'll be interesting to see how that report goes.
And then on the weaker side, Netflix has had trouble paring losses from the recent sell-off. It hasn't been able to break above the 50-day. What do you think of Netflix?
I think out of all these, this has been a very strong stock. It's weakening a bit. I wouldn't say pressure it to the short side, but you have to take notice that the other ones we just talked about were above the 50-day.
Right.
This is below the 50-day, which shows you there's been some selling and not extra support like we've seen in some of the other, highly rated names. You look here at the chart too, you'll see it's still holding this gap. But it's a little, I wouldn't say it's a little worrisome if you're long. If you're not in it, perhaps even if it goes red today, you get a nice little short around 210. So I would say 207 to 210, you get a close below that, you're going to probably get a test of this 199. I think if you're looking for something to potentially short in that area, this one's showing you more signs than a LinkedIn or a Google, or an Amazon.
And news about Apple this morning. The stock was upgraded, and the Wall Street Journal put out an article saying that the company could actually strike a deal with China Mobile eventually. So do you think both of these news could be the catalyst that it could need?
Well, you have that, and you also have a potential double bottom. I was on the road. I left early on Friday, and I'm actually happy that my stream is really learning, besides our community, what a red dog reversal is, how do they enter it without me saying, oh, I'm long this versus that. They could actually do it on their own. And, they almost got me involved because I'm on the train, but like, you know what, it's been a good week. I want to just go out and enjoy. I'm not going to just go buy Apple, and call the trade desk. But anyway, if you look at the chart here, the stock's been battered and bruised all the way from the highs of 700 all the way down to where we put that low in at 385. Then you remember this lower area, this lower pattern, which wound up breaking right here, that ascending channel, never got back above resistance. And then, if you look here, some were saying, I'm going to see if there is some type of double bottom. And here's that 385. So it came in, put a low in at 388, went back above the 393, which was your red dog reversal entry. And then it closed relatively well on a weekday. So it gave you some clues to maybe be long some. I think even talking about at the end of the day, I'm like, if you have a good price, hold on to 20, 30%. So PS, it's opening above this area. If it were to close above 403 and get 2 days in a row, something a bit different we haven't seen in Apple in a while, maybe it gets a move to retest, this major resistance which comes in at 417. So overall, could be a decent trade. I'm not saying you better mark it down on your calendars that Apple's turned the corner, because it still has a lot to prove.
All right, let's do some quick hits here and talk the metals. We did get a calculated long entry in gold and silver on Friday. Let's take the SLV. Would you say the downside's over there?
I wouldn't say over, but I would say if you tactically look at a situation like this, where you see blood everywhere, I think, it came in Thursday. I'm like, I think 17.5 to 18.5 is a better buy than a sell. I tried it on Thursday, didn't work. I got stopped out, but at least there was a plan there. And then on Friday, when it really showed its true face and relative strength with the miners, I was like, okay, you know what? I lost a little bit on Thursday. Maybe that wasn't the day. And if you look here, Friday was the day. Friday, it opened up a little bit and then traded right through this 2-day resistance, which was 1830, giving you another 3.5 to 4% of upside to fill this gap. So overall, nice little trade. I'd say that this new area is going to be some resistance. I would say as long as this holds the top third and stays a little pent up, holds just say 1860, there could be another trade to perhaps fill this gap or a portion of it up to about 20. But overall, it's been in a weak sector, very harsh downtrend. But every now and then, there's these capitulation points where you could get a nice trade tactically and then look for a little bit more. So, I've trimmed and trailed myself out of 2/3 of the position, and I'll stay in some, if it shows some commitment.
All right, well, we like to talk Tesla, and the stock is now above its 8-day, holding that key moving average. Would you say if it continues to do so, we could see a move back to highs?
Yes, this one, I think, the move's not over. Not only during the correction did it hold up, it showed so much relative strength. It's above all moving averages. Again, earnings are going to be in a few weeks, so we'll look at that date coming up. But if you look here, a lot to like. This trend that we've been watching stayed intact right here. You had that one little tester day when it went to the 21-day but closed strong, and now it's building up a level flag. If this sort of take out 110.25, really your next level is that 114.90. But overall, there's a really few guys out there that are very positive, from Morgan Stanley and a few other places. I do think that this has all the criteria, being in a new group, very innovative, a great CEO, 19 million shares short, that at some point, you could see a stock north of 140 to 180 in the next, it could be 3, 6, 9, 12, 15 months. That learn how to trade it. Traders are having some success because it moves. You have technical points, and there's some action around it. So I don't think it's done with. And if you're late to Tesla, I don't think it's, the boat's left without you, or the car. The electricity is still going.
Exactly. But on a different note, how about MGM? The stock has been able to reclaim all key moving averages and has been able to erase most of the damage from the sell-off.
Yeah, this one had a really nice snapback. So if you bought it in the hole, whatever, you already got your snapback. At this point, I think it needs time still. But overall, it shows you that it's still in the game, right? It came all the way back to retest this area, which is the area we got involved with when it broke above this 13, and there was power here. So quick snapback now, I would say it should hold above this 14. If it keeps this gap intact, perhaps next time it might take earnings or whatnot to get above 15 and then continue. Overall, I've spoken about this stock, saying I think this year it has 18 in its future, or I'd say this year or maybe even to next year. I still think that this is one heck of a long channel that goes back years. Above this area, you have the 200-day, but overall, this could see a lot higher prices, especially if the economy finally gets some footing and you see hotel rates go up, which are starting to, and you see I like this name, not as just something you focus on, but if you have a portfolio approach, you could have some of this in there.
Right, you've liked this name for a while.
Yeah, since like $8, $9, I've been tracking it, trading it, using a tier system. Sometimes it's easier than others, but overall, this maybe is even better just to throw in the drawer, because sometimes you get a move like you saw last, a week where it looked like it was like horrible, but then boom, bounced right back.
Right. Well, when we also talked about the financials, trying to show leadership, we did not mention JP Morgan, which broke above the N21 day. It's resting there. What do you think of JP Morgan here?
What do I think of JP Morgan? I think, it's in the game. It looks like a lot of other charts, not showing blaring relative strength, but it's acting a little bit better for the banks. You look here and you see this downtrend. It's just like everything else, coming to poke its head up. So some people are probably trying to short against it. During last week's rally, this was one of my vehicles that I chose on this day when it broke back above the 100-day. Look at this doji close. We're like, okay, if we trade above that high, it could get going, and it wound up going all the way to this area. I'm not in it now. So we'll see if it could hold above this 52.5 for a little bit and go sideways and the market stays strong. This will be a candidate to jump on if it were to break this downtrend and get back, back in vogue. If you look here, just real quickly, Goldman really didn't have the same type of power of bounce back. So just, this is showing a little relative weakness as of late. See if that continues.
So you said you come in today about flat. You'll be continuing your tactical approach. What else will you be focusing on as you head into the trading session?
I'm long a little silver.
Little silver.
Which I took 2/3 off. I'm like, let me trail some of it. It was a nice trade Friday. So I'm going to look to see those areas of the charts that I showed in the S&P and all the sectors. Want to see if it would be nice to see if we maybe have a few inside days to digest the move from 1560 back to resistance, to give us a little bit more of a platform, so then if you go through resistance, we could buy it for a gap fill. Right now I still think people have a little bit of short on the brain. I know on Thursday I went out short, and then Friday talked about covering, that I wasn't looking for much, and the Dow was down 125 points. So today it's nice not to come in short. So some people might look to fade this up open, but overall the range. You saw it there. Spiders, the longer the spiders stay above 160, the more conviction some bulls will get for perhaps a move through that 162. If we start to break below Friday's low, if the scalp open fades, you're going to see some shorts break that 160, and then that next level underneath it really is 158.5, 159, and that'll be that intermediate spot. But overall, it's a new quarter. There's new fund flow, so you can interpret a lot from the action this week. For the rest of July by how we maneuver here, whether we hold and break above or whether we just fade in, the vested interest that wanted to have nice dresses on, you see underneath them as they walk away. So something like that.
Yeah, something like that. All right. Well, happy trading, everyone. Have a great Monday.